Right. Good afternoon once again. Sorry for some technical disturbance to getting this done. There will be some background music with a closer to audio about that. I'll try to make it as simple as that for you all to understand. Now, by now, I think the tune would have been shared with you all, and you can see my screen. So, basically, what I'll be talking is about on insurance and the various aspects of insurance and how it will relate to your day-to-day functions. And I prefer this to be a two-way dialogue rather than me speaking the entire 4 hours from one way. Right. So that's the background rules which I want to share with you all before I start my knowledge sharing or the presentation on insurance, which is a module in your core area. Right. We'll start with the term called insurance. Sorry. Now, the term insurance is very common these days. You can hear this in any media, maybe electronic media, printed media, social media, anything. Right? So, before I go into the insurance on a technical jargon, on a technical word per se, can anybody tell from the audience in very simple language, in a layman's language, what do you know about insurance? What do you think about insurance? Or what the definition of insurance? Say, for example, when you say banking, you all are working in the banks, or you know what's banking all about in a nutshell. Can somebody tell what's about insurance or what's all about it or what's happening there in insurance? Any suggestions? Any answers?
Protection.
Transferring the risk.
Transferring the
Risk.
Okay, so first of all is protection. Second thing is transferring the risk. Sorry, what's the third one?
Giving the risk to another party.
Giving the risk to another party.
Yeah.
Right. 3. What's the other one? Another 2 more. So one person talk about protection, another person talk about risk. So is insurance only protection only? Anything else? Does insurance give you protection only? Anything else? If you buy life insurance, what's happening generally?
Investment.
Exactly. So it's protection, risk, different terminology, and investments. So we'll talk about investments. What's all about investments? So all these answers are correct. So that's what all about insurance. There are 3 main components in insurance. One is you get the risk transfer. So you talk about the transfer from one part to another, insured to insurer. And it's a transaction. It has to be done at a premium. So we will go into detail what's all about these, what I'm talking into. If you see the next slide. So here I talk about insurance, 3 main components. Component number 1 is risk transfer. Component number 2 is from insured to insurer. And component number 3 is premium. So these are the three main factors. So could you mind noting point number 1 is risk transfer, point number 2 is insured to insurer, point number 3 is premium. So these are three main points which are in various types of insurance in various forms, which we will deal as we go along. Right. So basically, if you talk about insurance, there's a risk. Right? So insurance and risk goes together. It's like if you talk about car, there should be petrol or diesel, or there should be tires. If you talk about banking, you need to have customers. You can't talk about banking without customers. So similarly, insurance and risk goes together. When there's insurance, there's a risk factor. When there's a risk factor, there's insurance. So but the question is, can all the risk covered by insurance or not? Let's talk about it later. Right. The next thing is a risk. Very commonly, we talk with a term called chance. Generally, these two words are being used very loosely in different contexts. Risk versus chance. These are two different things. Now, if I ask a question from you, if you have to cross the road, you know where IBSL is situated. From one side to another, you need to cross the road. Assuming there's no barricade in between, now there's a barricade, but assuming there's no barricade, you have to cross from to one side to another side. Crossing the road from IBSL to the other side, is it a risk or a chance?
It's a risk.
It's a risk. You are going to buy a lottery in the evening. Risk or chance?
It's a chance.
Sorry?
It's a chance.
A chance. You are going to sit for the IBSL Diploma exam. Risk or chance?
It's a risk.
It's a risk. So I will not comment on, we'll see. You are going to marry a girlfriend which you have been knowing for some time. Risk or chance?
It's a risk.
It's a risk. Why? Then why do you want to marry?
Big risk.
So I don't know, no comments, right? So these are common examples. So these are common examples. Research. Now you see the difference between what the risk and chance, right? There are some differences. If you want to invest in stock market, share market, you go to a meal to 5-star hotel. You have to pay the bill or you have to pay in advance. Then sitting for exam, crossing the road, fire in your house. So those are some of the common examples where you can, the line of distinction is not very clear between risk and chance. So there are some examples, probably these are some of the examples which I will talk later. You should finding a partner for life doing. So these are very common examples which gives you understanding what's all about. So insurance was a risk. So I told you when there's a risk, there's insurance. Then there's insurance, there's a risk. And risk is a chance. Risk is basically there's a loss, but the issue is uncertainty. Now, the word uncertainty has two things. You don't know when it's going to happen, how it's going to happen. Uncertainty has two elements: when and how. Right? Can you just uncertainty of loss? Put a dash there. After the I'm talking about third line. In the third line, uncertainty of loss, put a dash. Open a bracket. The word uncertainty has two components. One, when it's going to happen. Two, how it's going to happen. Examples. 1. In case of fire, when the fire will occur. And how it will occur. Number 2, example number 2. In case of life insurance, how the death is going to occur. Either by natural or by accidental, and when it's going to happen. Comma, soon after the policy commenced, or halfway through the policy, or maybe during the last stages of the policy. Right. Is my example is clear? Are those two examples clear? Hello? Can you all hear me? Hello? Hello?
Hello. Yes, sir.
Can you all hear me?
Yes, sir.
Is to the examples clear?
Yes.
Fine, thanks.
Uh,
So as a last point, I said uncertainty when and how the loss happens. Now, recently, you would have seen in the media, I think maybe yesterday or day before, probably day before, there was a fire in a in a eating place in Racecourse. You must be knowing the place. In the midnight. And now it's confirmed it's a gas leakage happened at the restaurant. So that's uncertainty. That's a fire. So nobody expected the fire to happen at that time of the day, midnight. And apparently, that day had been the where the football final between Sri Lanka and Seychelles on the Prime Minister's trophy. Not soon after the match, maybe a couple of hours after the match. So when? The time. How? Gas leakage. A multinational supermarket chain, eating restaurant chain would not have not thought about a gas leakage will happen at that end. But they are so concerned about their risk factors, the hygienic factors, security factors, but that happened. So uncertainty when means after midnight. How? Gas leakage. That's the uncertainty. There's a classic example which I can think about, which happened maybe 2 days back, which is in the news and SMSs these days. It's a very common example which all can understand. Now, these are some of the common examples which I spoke about in classification between risk and chance. Right, think about yourself whether these are risk or chance, then thereafter we'll mark it whether it's with the risk we'll put R, with C we put C. If it's a risk we put R, if it's a chance we put C. Right. So 1, 2, 3, 4, 5, 6. So these are very common examples, right? We'll all go through one by one. Driving a motor car. R or C?
R.
Yeah, risk, market risk. Crossing the road.
R.
Yeah, okay.
R.
Last two examples, share market, lottery.
Risk and a chance.
Chance.
Buying a lottery is a chance.
Right. Somebody said risk. Can I hear what that reason is? Because there should be a valid point that I can think about it. Majority went for last two examples, chance. But somebody said there could be a risk as well.
In case of drop the market price, share price.
Well, when you enter the share market, you know it's going up and down. So it could go up, it could come down. But when you enter share market, you can't. You don't enter the market with the knowledge it always goes up. It comes down as well. Is there any other reason you say risk? Yeah, so the last two examples is chance. Right. Open your bank account. Having a meal in a hotel. Finding a partner for life. Doing an exam. Are these risk or chance?
Opening a bank account, risk.
Why? Somebody might rob your money.
Like these days, like with the deposits and all, the person who are like intend to to get a return of it. So sometimes so many people are like relying on the profits or the return from the deposits. So these days,
Fine. But that's a market condition. No, that's a market condition because
it depends on.
I do agree with you. It's a risk if the trading in Sri Lanka in the banking sector if they had a very bad reputation couple of years back, or it may be the case where the banks rob customers' money or they utilize customers' money for something else. Then there's a risk. But opening a bank account, FD rates coming down, FD rates going up, that's a market behavior, I think, which happening all over the country now. At least certain countries, single digit interest rate. So at least we sometimes we give double digit interest rates. So you all be knowing as bankers. So it's basically a risk in the sense. A risk in the sense, I agree with you if the bank malpractice the customer's money, but it's a chance. How we word is chance means how you're going to keep it. If you are going to overdraw the money or if you are going to keep the money forever, how you are going to. It's basically if you open a bank account, you should be able to. It's like you have a credit card. If you have a credit card, I mean, you must know how to use it. You can get ruined by using credit cards, or if you have to pay interest, keep on paying interest. It's a massive loss on you. So you must know how to use it. So in that sense, it's a chance. Risk in the sense, agree with your point, but if the bank has been probably doing very bad right throughout, manipulating customers' money, then in that sense it's a risk, but otherwise a chance. Right. Next example, having a meal in a hotel, risk or chance. Any guesses? Right. Finding a partner in life. Sorry? I can hear you.
It's a risk always.
Anyway, I will give my answer later. Doing exam. Risk or chance?
It's a risk.
It's a chance.
It's a risk.
How if you don't study and go, it's a risk. But if you study and go, it's a chance, right? So basically, opening a bank account, having a meal in a hotel, finding a partner for life, and doing exam, all these are chances. Because I suppose here, if you want to take something as risk, you have to think about the last 2 points. Either a loss and either the uncertainty. And then when and how. If that's not there, it's always a chance. Right? So 1 and 2 risk, 3 and 4 chance, here all chance. So those are the definitions, because you need to understand these 2 words. This can tell, because that's very commonly people misinterpret, misuse in different contexts. So basically, the word chance does not go with insurance. Last 2 points. Share market, buying a lottery, those you can't insure. You can't insure. Similarly, all these 4 examples you can't insure. Why? Chance. Right? But point number 1, you have motor policy. Point number 2, you have motor policy. All others, 3 and 4, all 4 here, no insurance covers. I hope that's clear. To distinguish between risk and chance. Right. Now we'll move on to something more technical. Classification of risk. Now, these are the three ways where any risk could be classified: pure or speculative, financial, non-financial, fundamental, and particular. Now, the definition varies from term to term. If you take the word pure, it's called pure risk. There's a loss only. Speculative risk, there's loss as well as profit. Right? If I say once again, in terms of pure loss, there is loss only. If the event happens, there's a loss. If the event does not happen, there's no profit. Speculative, profit and loss. Right? Buying a motor car, you might meet with an accident. You might go and knock somebody, or somebody might knock you. So if the event happens, there's a loss. That's a pure risk. The event does not happen. In other words, if you don't meet an accident, there's no profit for you. But these two events depend on the performance. Your share price might go up, profit might come down, loss. A lottery ticket, you might win millions, profit. You might not win millions, you are going to lose 20 rupees or whatever the cost of a ticket price. So pure means 100% loss. Speculative means loss or profit. Here, no profit. Right. Financial means in the risk event, you can assess it financially, monetary terms. Non-financial, you can't measure in monetary terms. If your vehicle meets an accident, you know the cost of the damage, cost of damage to the vehicle, financial. But here, finding a partner for life, you can't put a money value. It's a non-financial. Fundamental means man-made. Sorry. Fundamental means things happening naturally, like tsunami, floods, earthquake. Particular means man-made, like motor accidents. So you will see any risk could come under all these three criteria. Now I took the motor car example, motor car accident, it's a pure risk. Financial risk, particular risk. Right? And if a risk has these three elements only, you can insure. So this is a little bit technical. Is it clear, or do you all want me to explain once again? Yes or no? Do you have to explain once again? Yes or no? Hello?
No, sir, it's clear.
Right. Only thing is, I need to give you some definitions, not big ones, small definitions. In case if you get some question of the exam, how you need to answer. Right. So classification of there are three elements: 1, 2, and 3. Right. Put a dash here and take this down. Pure risks are associated only with losses. Example, driving a motor car. Full stop. Speculative risks are associated with loss or profit. Example, investing in the share market. Next slide. Financial risks are defined as risks where the incident or the event could be measured financially. Example, in a motor car accident, the cost of the damage to the vehicle, could be assessed in financial terms. Full stop. Where the event cannot be measured in financial terms, are termed as non-financial risks. Example, finding a partner for life. We'll go to the last point. This one. Fundamental versus particular. Put a dash, end of the word fundamental. Fundamental risks are defined as where the origin of the risk is happening automatically.
So what's the last word, sir? Is happening
Automatically. Example, floods, tsunami. Right. Full stop. Particular risks are defined as risks which are happening human intervention. Due to human intervention. Example, car accidents. Right, next point, put a note somewhere here. From the above examples, it is clear that any event could be classified under any of these definitions. Example, motor accident could be termed as pure financial and a particular risk. Right, so this is the classification of risk with the examples. Is it very clear before we go to the next area? Now these are before technical areas. Is it clear here?
Yes, sir.
Sorry, yes or no?
Yes, it's clear.
Thanks. Right, now we move on. These are the main fees of insurance. Right, main fees of insurance. We talk about risk transfer. So risk I talked about earlier. The risk and chance. How are you going to distinguish between risk and chance? Operation of common pool, something which are going to hear now. And payment of the equitable premium. Payment of the equitable premium, not the equal premium. Right. Risk transfer, you know, when you transfer risk from one party to another, one party is insured, the person who is going to buy the insurer. Number two is the person who is getting the risk transfer, the insurer. So when you transfer the risk from the insured to the insurer, he will charge a premium. Nothing free. No free lunches. I will take your risk. To taking the risk, pay me a premium. Why? If something happens, I have to pay your claim. Simple as that. Right. So main fees of insurance is transfer. From the insured to the insurer. For a premium, if something happens, insurer will pay the claim to the insurer. Now, my next question is, what is the risk you are going to transfer? In case of life insurance, if you buy a life policy, what is the risk you are going to transfer? If you buy a motor policy, what is the risk you are going to transfer? That's all you are going to take it here. Right. Simply, we take about more common example, motor car. Right. When you buy a motor car, the law says minimum third-party insurance. But it leaves that out, we say the full insurance. In a full insurance, what is the risk the insured is going to transfer to the insurer? Insured to insurer. Right. We are in point number 1. So what is the risk you are going to transfer in a motor policy? Say you have a car or you have a motorbike. You buy insurance, you transfer risk to the insurance company. So what is the risk? My question is, what is the risk you are going to transfer to the insurance company? A motorbike or a car and say, okay, good, I have insurance, nothing to worry.
Damages that can be happen.
To the vehicle.
Yeah.
That's only
No.
then what else?
Damages to third parties.
Okay, what else? So what about damage yourself? තමන්ට වෙන අලාභාන ගෙවන්නේ නැද්ද? ගෙවනවද නැද්ද? හත්ජාන්තුරක් කළා ඇඟිලි කපලා හොස්පිටල් ඉන්න උඩ. So basically before you move to third party you have to pay yourself. So that is the risk you transfer in a motor policy. Then what is your risk you transfer in life policy? Life policy must transfer කරන්නේ. Risk එක මොකක්ද?
Death.
Only death? What else? Is it only death? What about with an accident? What about hospitalization? Admitted to hospital for dengue. Hospitalization. Or I've been to hospital for heart attack. Critical illness. I've been to hospital due to accident element. So various policies, various type of risk will transfer one person to another, from the insured to insurer. So depending on that, the insurer will charge a premium. Sorry. Right. Put a note here, put a dash here. Here, risk transfer again, you put a dash here. Put a dash here. In insurance, various types of risks are being transferred from the insured to the insurer. Example, one, in a motor policy, the risk of meeting the insured in an accident. Full stop. In a life insurance, means an accident, insured, the vehicle itself, and to the third party property or the third party itself. Next slide. In life insurance, the risks that are being transferred are number one, death risks. Number two, accident risks. And number three, hospital risks. And number four, critical illness risk. So that is risk transfer. Point number one. Right, so this is point number one, point number two, and point number three. So point number one is clear. Now, point number two, operation of the common pool. Right. Have any of you all heard about the word common pool? Any definition of common pool? Has anybody heard about common pool in insurance?
Where the premiums are collected.
Where the
Insurance premiums are collected.
no. Here it's a pool. We talk about a pool. Any idea? Now, common pool is something. If you take a pool, what's happened? Lot of people inside swimming pool. Not only one or two. Same concept in insurance. Right, your pool where different risk factors are coming here. Example, if you take a life insurance, there's a common pool that we maintain. Fire insurance. motor insurance, health insurance, any insurance, you maintain a common pool. Common pool is where the risk factors are common, you transfer a pool. In life insurance, the common pool concerns a lot of people. Physically fit people, physically unfit people. Health-wise good people, health-wise impaired people. Or maybe laborers, clerks, CEOs, different people, common pool. So in a common pool, you get law of large numbers. So then claim happening to all these people are very, very remote. Only one or two will claim. That will be a profit for the company. Maybe fire pool, marine pool, life pool, surgical and hospital access pool. So basically we say law of large numbers will amount to a common pool. Right? So put a dash here. Right? Take this down. In any insurance, it is advisable to maintain a common pool which have different features of the main risks. Right. For example, in life insurance, you get healthy people, not healthy people, different working disciplines, different working disciplines, which will cater for wider section of the crowd. Next line, similarly, in a vehicle pool, it consists of vehicles, transport vehicles, and different types of vehicles. Full stop. The advantage of having a common pool is the risk is spread over the entire members of the pool. Last point, payment of premium. What premium? Equitable premium. There's a difference between equitable and equal premium. Right? Say, for example, I'll give two examples. You get two people, 25 years, same height, same weight, same health condition. One is working in a bank and other one is working at Ceylon University Board as a person who works on the high voltage lines. Two people, same age, same height, same weight. First person occupation bank clerk, second person working in the Ceylon Electricity Board high voltage lines. Are you charging the same premium or not? Yes or no?
No.
Why?
Because of the electricity board employees have this employment is inside.
So what is the you said it's not clear. He's working the electricity board. That's why you want to charge high premium.
Yeah, because of the life risk.
Yes. So that's why I want to verify about the equitable premium. So premium varies of occupation. Second person, high voltage line, high risk job. First person, no high risk. So equitable premium is being based on the risk factors. Right, payment of equitable premium for dash here. What will happen here is even though both the insured have the same age, same height, same weight, if the occupation is not equal, the premium could be deferred. It's called the equitable premium and not the equal premium. Right. Is these three clear? So basically risk transfer, common pool, you charge a premium. That's all here. Very relevant question. Why do you want to buy insurance? Right? Why do you want to buy insurance? Why can't you? Or is it possible to live you without insurance? These are 5 of the reasons, or maybe more, where the researchers have found why people buy insurance. Peace of mind, loss control, social benefits, investment of funds, and invisible earnings. Right? These are some of the areas why people tend to buy insurance. Right? But we have peace of mind. How does peace of mind come with insurance? Any idea?
We know that we have transferred the risk.
Okay, then. Okay, you transfer the risk, then what happens thereafter? If something happens to you,
Insurance will pay that.
insurance will pay to the insured, or if the insured is not there, survivors. Right? Peace of mind. First of all, I'll go to the point and thereafter I'll give you a short note. Loss control. Right? This is basically in general insurance, sorry. This is basically general insurance. If you want to insure a property, big supermarket, they will give you a guideline of loss control. To minimize the loss, they give some advices like fire extinguisher, up-to-date maintenance, don't store chemicals, things of that nature. Loss control. Social benefits. right? Social benefits means, say, for example, now it gives employment, it provides investment, right? So those are a lot of things where you can't see it face to face. Social benefits, investment of funds. Insurance companies collect huge and huge and huge millions of premiums. So those funds could be shared in the stock exchange government body as per the regulations given by the insurer, by the regulatory commission, IRCS, which we'll do in later. Invisible earning means this comes where sometimes uh, if you have a subsidiary overseas, the money sent to the subsidiaries are called invisible earnings as far as the home country is concerned from the earnings of that company. That's possible. And when you send it to your local company in Sri Lanka, it's an invisible earning. Right. So just put a note on each area. Peace of mind. I just put a note here. This refers where the insured will know if something goes wrong, there is a backup plan for him and stroke or to his dependents. Number two, loss control. This is very much noted in the general insurance area, where a lot of advice by providing various services, how to minimize the losses. Example, latest fire prevention methods. Right, social benefits. The through insurance.
Sorry, not clear.
Through insurance. Lot of employment opportunities are being provided to the people. Point number 4, investment companies collect huge amounts of premiums which need to be invested in the share market or various other areas as specified by the regulator. Last point, invisible earnings. This refers to earnings through the foreign subsidiaries of the mother company. Right, so these are the main reasons why people buy insurance. Peace of mind, loss control, social benefits, investment of funds, invisible earnings. So these areas are a little bit technical as opposed to the first couple of slides. I hope those 5 points are very clear with my explanation. Anything you want to clarify here? Anything not clear? Is my explanation clear?
Yes, sir.
Right. So basically up to now, so far, what we've done is the basic definition, what is insurance, distinguish between chance, some examples to distinguish between risk and chance, classification of risks, main features of insurance, and why do you buy insurance. Right. Now, you move to another area called risk management. Before that, give me a minute. There's been a call from Menaka. ඕමන කෝල් කල තිබ මිස් කොල තිබ right. මෙන අමාරු මේනක මට ඔව් මොකද මොකද ඔව් හරි හරි මං කියත් කරේට right. The next area is a interesting area, risk management. Now, the word risk is there from the beginning. It's in insurance, you get the risk. Now, basically, in insurance, we manage the risk. To manage the risk, we have to identify the risk, measure the risk, and control the risk. I'll give a simple example. I spoke about the example of crossing the road in front of IBSL, assuming there's no barrier there. So you told crossing from this side to that side is the risk. Now, while crossing the road is a risk, you identify what are the incoming objects. It could be a normal push cycle, motorcycle, three-wheeler, private bus, ambulance, or a security convoy. Or you could slip yourself due to something on the road. You identify the risk. You measure the risk. And you control the risk. Right? You identify the risk is a three-wheeler. You might cross the road. You might see it's a private bus. You might not take a chance. Security convoy, you might not take a chance. Ambulance, you might not take a chance. You measure. And you control. So these are the elements that happens in day-to-day life. You manage the risk. Right? Say, for example, now here, there's a long weekend. Thursday, Poya, Friday, Saturday, Sunday, we are coming to the end of the holiday. If you want to go a long distance trip, you identify the risk. Presently, there's health risk, or there's a climate risk. Once you go there and come back, there could be a theft risk at your place. You identify. Then you measure it. How I'm going to tackle it. And then you control it. Go or no. So these are three things. It happens everywhere. This is number one, number two, and number three. Any business opportunity, any home opportunity, these are the areas you need to identify the risk. Identify, put a measurement, and control. Proceed or not. Or take insurance cover. Right? Just put a note here. Make a note of that. In terms of risks, identification, measurement, and control has to happen always. It could be applied in a business situation or in a given situation at home. Next line, risk control means if the risk cannot be controlled by the person concerned, it could be transferred to a third party. called insurance. Right. These are the main elements of an insurance contract. Now, insurance, we told, is a contract. Between two parties. Insured and the insurer. The person buying insurance, the person who is selling insurance. Buying and the seller. So there should be offer and acceptance. I should offer buying insurance, he should accept it. Simple. Consideration means you have to pay something, put a dash here, premium. Right. Intention means legal relations. So it should be a legal binding contract. There's nothing other than that. It should be a legal contract. So put a dash here. Legal contract. Capacity contract means if I want to buy insurance, I should be a major, and the insurance should company have the capacity to sell insurance. They should be legal binding. So put a dash here, which means both the insured and the insurer must have the legal capacity to enter into the contract. Insurable interest I come last. Legality of the purpose. If you want to buy insurance, there should be legal purpose. The purpose of buying insurance should be legal. Put a dash here. The purpose of buying insurance should be legal. Right. Utmost good faith obirima fide means it's simple. I will explain first. Thereafter, I'll give. So when you are buying insurance, you must tell the insurance company the truth in the proposal form. You can't hide facts. Your health, your height, your weight, life insurance, your vehicle, car, use, private use, hire, whatever it is. Right? Tell the truth. Right? So Burima Fide means put dash here. Dash, which means the insured must disclose all the material facts in the proposal form. Right. Insurable interest means, put a dash here, you must have an interest to buy insurance. Comma, which means there should be some legal relationship for you as the insured to insure the property or the life. Right. So these are a little bit of technical terms and legal terms. That's why I went very slowly. Before we move on to the other areas, other slide number 13. After doing this, we'll have a break. There are about 1, 2, 3, 4, 5, 6, 7. May points අතේ මුකුත් නොතේන යමක් තියෙනවද? Yes or no? Especially number 2 and 4. Others are simple ones. 2 and 4 clear the නැද්ද? Is it okay?
Clear, sir.
Clear?
Yes, sir. Clear.
Okay. Right. Types of insurance contracts. With this, there I will have a break. Basically, life and non-life. Life means individual insurance. Non-life means like motor, health, fire, marine, so on and so forth. Now, there are two words, benefit and indemnity. Life policy, we get benefit policies. Non-life policy, we told indemnity policies. Right. Rather than explaining those 2 points, those 2 words, I will give 2 examples. Say there's a person called Mr. A. He has 5 life policies from company A, company B, company C, company D, company E. Okay. Example number 2. Mr. A has a car insured with company 1, 2, 3, 4, 5. So Mr. A has 5 life policies, company 1, 2, 3, 4, 5. Mr. A has a car insured with company number 1, 2, 3, 4, and 5. Okay, is my example clear?
Yes, sir.
Is my example clear?
Yes, sir.
Alright, now my question is, if Mr. A dies, how much his wife will get from his life insurance? Point number 1. Point number 2, assuming Mr. A is there, if Mr. A's car's total loss by fire, how much is going to get as his benefits from insurance companies? Is my question clear or not? Is my question clear or not? Yes or no? Is my question clear or not?
Clear, sir.
Right. Can somebody give an answer? Any answers?
All the insurance companies, it will be a collective amount.
In what policy? Life or general?
General
Life.
for the car.
In life, how does it goes? If Mr. A dies, how much his wife will get from companies? All companies get together, only one pay. How does it comes? Any answers? How does the life companies pay? They all get together pay or only one company pays?
A collective amount from all the companies.
Right. Vehicle insurance, does all companies get together and pay? Says vehicle is worth about 1 million. He has insured in all 5 companies. He lost his by fire. Will he get 5 million?
No,
No,
How much will
Only
he
one.
get? So
only one.
only
he will
1
get
million.
1 million from all the companies sharing or otherwise. Life policies, all the companies will get together and pay 5 million, assuming it's each policy is 1 million. That's why we call here benefit policy. It's a benefit. Indemnity means it's you recover. The indemnity means loss only. You recover the loss only. So life policy is a benefit. General policy is indemnity policy. That's the difference, right? So put a dash here. A person can have any amount of life policies and in the event of a claim, he will get the benefit from all the policies. Comma, as such, it is termed as a benefit policy. Here, in a non-life policy, in the event of a claim, he is entitled only to the amount he lost due to the event. Full stop. For example, if he has insured his vehicle in 5 companies, he will get the loss value by collectively from all the companies. Right. So with this, we will have a break for about 20 minutes. So before we go into the break, is there anything you want to clarify? Or everything is clear?
Yes.
Yes or no? Is it okay? So we're about now it's about 3:33. We'll have about 20 minutes break, and thereafter we'll start. Only thing is, can I continue the same speed, or is it too slow to speed? Is it okay if I continue the same speed? Is it clear for you all? Okay, let's meet after the break, about 20 minutes. Thank you. Right. We will continue from slide number 14. Right. Is there anything you all want to ask, which I did up to slide number 13? Sorry. Right. From 14. Is there anything you all want to ask so far what I have done? You all can hear me?
Yes, sir.
Right. So
Yes,
we
sir.
continue from slide number 14. Insurance. Right. Now, These are various types of life insurance which you all can see in the market. Pure life insurance, endowment insurance, and unit link insurance. Pure life insurance means you get only the life cover, no return. It's like a mortgage protection policy. When a customer wants to come for a loan, you all give what you call a mortgage protection loan. It's something like this, what you call pure life insurance, only life cover. That is only in the case of a death you pay the cover and no return. That's called pure life insurance. So just put a dash here. Only death cover is granted and no investment cover. Right. Endowment insurance, just put a dash. Life cover as well as the investment also. All right. Unit link insurance, dash here. The life insurance contract is related to the market performance and the return will be decided on the performance of the market. These are the non-life insurance categories: motor insurance, fire, marine, and miscellaneous. Now, miscellaneous insurance, it's a vast area or covers a lot of areas like surgical, computer insurance, machinery insurance. It covers vast areas of other miscellaneous type of insurances, right? So put a dash here. This is a vast majority of area which covers machinery, surgical, and computer insurance, etc. Right. The The next area is reinsurance. Now, reinsurance is another area of insurance. Now, the word re means, right? The word re means you are insuring. Re means once again. This is insuring the insurer now. In insurance, what happens is you buy insurance, that's called insurance. When you insure your life, motor, that's called insurance. When the insurance company buy insurance, that's called the reinsurance. You insure in the insurer, that's possible. That's also reinsurance mechanism. That is advantage of the insurance company provide capital to the insurer to engage in writing larger risk beyond their capacity. If the insurance company want to take a bigger risk, right, beyond their capacity, they can go to the reinsurer and get it insured. That's what they call the reinsurer. Managing the loss, good, either wholly or partially. That's how it happens. So the reinsurance means you, insurance company, insuring once again of large risks. Now we are coming into the legal areas of insurance. Now, if you take the legal areas of insurance, the law that governs insurance is the Act number 43 of 2000. That's called the Regulation of Insurance Industry. We call RII Act, right? The only act of Parliament governing the insurance industry. That is the only act in the Parliament. The key feature is to establish the Insurance Board of Sri Lanka, IBSL. Now, earlier we call IBSL, Insurance Board of Sri Lanka. Since this name was something similar to Institute of Bankers of Sri Lanka, now the name has changed to IRCSL, Insurance Regulatory Commission of Sri Lanka, right? So put a dash here. Put a dash here. This name has now been changed to put all in capital IRCSL. Put within bracket Insurance Regulatory Commission of Sri Lanka. Right. The purpose of IRCSL is to develop, supervise, and they are to regulate the insurance. That's all. But this is the main act. There are two amendments, which I'll talk later. Right. The main possibility of responsibility of it's no more IBSL. Now it's called IRCSL. Right. The main responsibility of the IRCSL is to ensure that carrying out the insurance business is done in a professional and prudent manner, safeguard the interest of policyholders as well as the protection of people, as well as the protection of future policyholders. So basically, what they do is they protect the policyholders, present policyholders as well as the future policyholders. They safeguard. That is the duty of IRCSL. So basically, they look after the interest of the customers or the policyholders. Then this act was amended in 3 of 2012. With that, Because basically there was an amendment to this 43 of 2000 in 2011. With this, now all insurance companies has to separate in life and general, life company and general company. In 2015, now if you all you have seen, except for insurance corporation, all the companies, life company separate, general company separate. All right. Certain new provisions regarding the directors of insurance companies were also made in the act. So there were new provisions that came under this act. Right. Then there was another amendment came in 2017. So basically, a 2011 amendment was insurance company was segregated in life company and general company. That's the difference. 2017, there was another amendment that came. Right, 2017 amendment, the name was changed, as I told you, from no more IBSL. Now we call IRCSL. There are certain listing requirements they told. And Section 6 actually approval to work in different class of insurance in different insurance companies. Now, with this, there's another change that came in. An agent can work in two companies, life company one and general company one, on different insurance companies. Now, because what happened is earlier, all were in one company. With the segregation, life company came separate, general company came separate. Now what happens? So if you are an agent working in both the companies, your income is lost now. So with this, what you can do is, you can work in two different companies, life company separate and general company separate. That allows you to earn some money. That's why we say different class on insurance in different insurance companies. They allow you to work there. All right. Insurance ombudsman, like your bank's financial ombudsman, insurance ombudsman is also there. It's a mediation and dispute resolution method rather than going to courts. It was commenced in 2015 with the approval and concurrence of IASL. IASL means we call Insurance Association of Sri Lanka. Yeah, it's made up of all the CEOs of insurance companies. That's why I call IASL. And not IBSL, now we call IRCSL. With both the companies getting together only, rather both associations getting together only, ombudsman scheme was built up. It is available in India, England, Australia, and New Zealand. And he has a power to dispute, power to resolve disputes between policyholders and insurance companies. The complaints procedure is very simple. You can just nominate them. And he has power to nominate up to 500,000. So this is a limited power to given to the ombudsman. Arbitration is another way of dispute resolution. It's a precondition litigation in some companies. So basically, ombudsman, arbitration, these are the ways they try to resolve the problem before going to courts. Because court action is very expensive. So rather than going to court action, you can finish with these two ways: ombudsman as well as arbitration. Right. Insurance selling, these are the present ways how the insurance be sold. Agents are there, brokering companies are there. Bank assurance channels is the latest thing. So latest two operations are these two. All right, banker channel means insurance companies ties up with banks, and they keep their agents or the people in the bank to sell insurance. That's called the bank assurance channel. Call center operation means insurance companies have call centers, so they promote selling insurance to customers. That's what called the call center operation. So these are the two latest methods, and these two are traditional methods of insurance selling. So ombudsman, arbitration, and these are some of the figures which I got from the IRCSL 2020 latest strategic review report, which is available in the website. And now with this chart, you can see the premium income and growth rate of the insurance industry. Right? Long term means life insurance companies. General insurance means like motor fire. Right? You will see premium income of life companies is growing. 16, 17, 18, 19, 20. It grew. Right? The premium income of general insurance companies also grew. Right? Then the growth rate of long-term business, it's like a slight growth. Right? Reinsurance I'll come in later. Then growth rate of general insurance companies is being coming down a little. Right? Reinsurance premium is coming down. So reinsurance premium income means when you reinsure, they give something to a profit commission. It's coming down. That means we don't reinsure much. So we try to keep all the insurance companies try to keep as much as possible. Then number of insurance policies and policy issued and policy enforced, long-term insurance. Right? With all the companies. These are the number of policy issues you will see. Sorry. There's a growth here. $16, $17, $18, $19, $20. Then these are the policies in force. It's growing. Right? Then there are other two indication, the number of policies in force, percentage of population in the labor force. So you will see it's below 50%. Not a very good sign with the life policies. These are general insurance policies. All these are latest figures up to last year. 2021 figures I haven't got it. This I got from the last annual report from the IRCSL from their website. The latest figures. These are the types of policy, general insurance policy. If you see the general insurance, these are the new policies 2019. The number of policies of motor is the highest. Motor is growing. Then miscellaneous is the same thing, same amount, right? And this is a chart. So 2019 new policies, 2020 new policies, renew policies. So it's a policy in force. Then it goes into insurance brokering companies. It's a bit of a coming down, going up, going up. I think that's all from my area. So basically, what I have done today is we went through what is insurance, right? We went through the term insurance, what's all about it, and the definitions. Definition, uh, examples, classification. These are main features of insurance. Why people buy, risk management, main elements of insurance contract, types of insurance, life various components, general various components, Reinsurance Act, amendments, ombudsman, arbitration, selling, some of charts. So that's all from my side. Right. Sorry. Right. Before nothing much to be done. It's basically a large area of insurance which I just made it a very simple way to all to understand about insurance. Right. Before I wind up, any areas you all to question? Anything තියෙනවද? එමෙතන explain කරන්න මුත් දැනක් ඕනේද? Anything not clear? Anything you all want to ask? Any person?
No, sir, clear.
What about others? If not, we will wind up the class, and Menak wants to convey a message saying that for next week only they will be having the class only on in the morning session. That probably must be on Sunday. So generally our class is in the evening. Next Sunday they are going to have the class on morning session. So if there's nothing, I will stop for the day. And I hope that you all got something to learn. Hopefully some knowledge have been taken by you all. Only thing, if you want further knowledge, you can always go to the IRCSL website, Insurance Regulatory Commission of Sri Lanka. In the
Did not
website,
get your.
sorry, because I couldn't hear you. Hello. Ruwan, you want to say something? Hello?
No, yes. We didn't get your voice clearly, sir.
Now it's clear?
We can't hear you what you are saying.
Now it's clear?
Yeah, now it's okay.
Right, sorry, I would have two things.
Clear.
Devang,
Yes, now it's okay.
yeah, Menaka wants to convey the message of next Sunday. The class will be in the morning session. So whatever the module they'll have in the morning. That's number one. Number two is if you want further information on insurance, the best thing is go to the website of IRCSL. You go to Google search and you type IRCSL, Insurance Regulatory Commission of Sri Lanka. You will get the lot of information on insurance companies, broker companies, selling mechanisms, so on and so forth. So that's a huge amount of information which you can get from the website. So if there are no questions or clarifications, so I will stop for the day. And I hope that you all got some messages, you all got some knowledge in insurance, not to the great extent, at least for some idea of what's all about insurance. There was a right, so that's my Gmail email address and the contact number in case if you want a clarification on the insurance you have done. So with these, I'll stop for the day. Thank you very much for your patience and hope you all got some knowledge. Sorry, not here.
That delivery to be able to hit the ball fine.
Sorry.
Is keeping the Western midfielders.
You're not clear for me. You're not clear. Hello? Hello? You're not clear to me. Okay, the gentleman who wants to speak to me, you can send an email or you can speak to me on the mobile number. So with that, I'll stop for the day and I hope that you all got some knowledge on insurance. Right? Thank you very much. Thank you for your patience. Thank you.